Yeah, I'd like to tell you a little bit about how I got started as a property investor today, just to give you a little bit of an insight of me and how I think and what I did. I was quite fortunate. The very first house I bought was the property we lived in, as well as an investment property. It was a dual lock. Didn't appeal to me so much at first because I was, like the typical homeowner. It was an emotional attachment. I didn't want someone living right next door to me. But I got over that pretty quickly, and it really ended up being a great start for us. Because not only did we have quite an affordable property to live in, but we had an investment, so it helped us get on top of our mortgage and had a second income stream. And it was from this that I started to really understand and learn a little bit about investing, and it really appealed to me, and it really excited me. But I needed some more information. I was very novice at it, so I just started, listening to other people and doing. I remember back in 2001, I did a weekend property course. And it was from two great property investors that just shared so much of themselves and their investment journey with us. And I just picked up so much from that weekend. And the good thing about real estate is there's no one way to do it. There's so many different ways you can invest. And that information that I learnt that weekend, I had to apply it to my situation. And that's something that I encourage everyone to do, because we don't all have to buy the $400,000 or $500,000 property, because for many investors starting out, that just might not be possible. So my point of focus was on what I was able to do, not what I wasn't able to do. So some of my early investments were in some rural communities around Victoria. And I was able to buy some properties for $55,000. I think was the cheapest property I bought in the early 2000s. Many of them were in the $60,000 bracket, $70,000 bracket, and they had really good rental returns as well. So for me, with the limited cash resources I had, and I was a self-employed business person, I didn't have huge income. By targeting those types of properties meant I didn't have to have a huge amount of money as a deposit, and the cash flow was very strong, so it wasn't affecting me on a weekly basis from a cash flow point of view. So for me, it was the perfect start. And I look back in hindsight at those purchases, many of which I still have today, and they have been very credible investments. The growth rates have been comparable to capital city growth rates, just starting from a lower base. But as these properties grew in value, it enabled me to leverage off them and buy keep expanding my portfolio. So starting from these cheaper properties, I moved into some multi-unit sites where I saw some opportunity to buy some properties, a group of properties on one title, generally a little bit run down, where I could add some value to those properties and manufacture some growth to try and outperform the market. And that is something that when I look back, it was a pivotal point in my investing, because it gave me access to capital a lot earlier than what I otherwise would have had. And typically these properties I bought had wonderful rental returns. I was buying them at a discount because they were on one title, and once I'd upgraded them and subdivided them, it gave me extra equity that I could continue to expand my portfolio. Another strategy I used is I went into some of the mining towns. That's certainly not a strategy for everyone, and it does carry risk. For me, it was about managing that risk, and I would target locations that were priced well. A lot of the purchases I'd make in those towns were less than $100,000. very good rental returns, 8, 9, 10% plus rental returns. And it was an area where I saw opportunity. I mean, Australia, really does have a wonderful resources industry, although it is a little bit subdued at the moment. Fundamentally, it's very sound, and I see opportunity in those locations. But you've got to manage the risk and mitigate the risk. And for me, it was buying in locations where I saw a future at a price point that I felt comfortable with. And it delivered returns. And for the most part, those investments have been very strong and still remain strong today. Some lessons learned in some of the higher risk towns where I did see significant growth in the early years. I probably should have cashed out because I'm still holding those properties today, and the values have dropped back to where they were when I bought them. So, a bit of a lesson learned, but again, very low risk for me because I went in at a low entry point. Another important part of my story and strategy was as we were coming into the GFC and interest rates were rising, there were some real challenges in the portfolio to manage the costs because they were rising, interest rates were rising. So I needed to find some cash flow solutions that would get me through this time of uncertainty and time of higher cost. And I employed a strategy called vendor financing. Yeah, so just briefly, vendor financing is where I would buy a property and then on-sell that property to someone who couldn't qualify for conventional finance. Either they didn't have a big enough deposit, they had some poor credit history, etc. And so that strategy for me was an income strategy. So I would make really good cash flow out of those properties by doing this strategy. But I would sacrifice the growth in the property. So it was, and I had to be very clear that it was an income strategy only. And what that did is enabled me to ride that time where interest rates were high and get me through unblemished, really. And it was, I look back and it was a really important move at the time. And the good thing is I still hold a number of those properties today, and as rates have come back to more normal levels or even drop below those levels, I'm still enjoying the strong income produced from those properties. And then look, that's probably the areas of my journey which are quite significant. For me today, it's a matter of managing my portfolio. I've been in the property market now for coming up to 15 years and see myself being in it for probably another 10 or 15 at least, perhaps longer. So for me, I'm well and truly into a management and maintenance phase of my investing. Not really growing the portfolio anymore at the moment. In fact, I'm starting to go into a debt reduction phase. Because for me, when I want to rely on the benefits of those properties, I want to have my debt as low as possible and the value of those properties as high as possible, and then I can make some decisions about what I do. Do I just continue to enjoy the rental returns, or do I sell down and pay some of the properties off? So that's a little bit about me and my story. It's been a wonderful journey. Certainly had lots of challenges, but it's great to have strategies to deal with those challenges. And now I really enjoy helping other people with their investment journey, be it one or many properties. It doesn't matter. It's about getting it right, making it sustainable for the long term. So that you can enjoy, living your life today while also planning for the future.